Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to the second trading day of 2016. And yesterday definitely was a very volatile start. You know, we came in, futures were down like 33 handles due to the fact that Shanghai got hit by like 7%, Europe was down 3%, and the question was, would we be down, 600-700 points ourselves in the Dow, or would we have it somewhat contained? So yesterday, I think at the low, the Dow was off 450 points to then get a little push into the end of the day. So all in all, it wasn't a crash. It was just a pretty weak start, probably one of the weakest starts that we've seen to the year since 2008, I believe, and that's on top of what I believe was a very hard, 2015 that, had a lot of weakness that was masked by, a flattish to down, S&P. So we come in today, question was what would happen overnight. The Shanghai opened 3% lower, came off the lows, but still off a little bit. So that's about 10% from the open to the low. It's already been in a range of 10% over there in China. And Europe, that was down 4% plus, is off about 0.5%. So our futures that happened to be up, 6 to 9 handles at a few different points last night are now down 10 to 11 handles. So let's go over some levels in a few different stocks and sectors and how potentially we can make some money today based on scenario A and B. So here's the SPX first. If you go to the S&P, you will see to start the year you had this sequence of lower highs, which was a technical clue not to have much risk on heading into the new year. Here is your little descending channel to the downside. This is how we closed the last day of the year below the moving averages, and then this was yesterday. So we briefly pierced, that little floor that I was talking to you about that, I put in there, which was 93 to 2005, came below it, came back above it, and then here is probably where we are this morning. So what do we know? Now we know, another point of reference, I guess. Okay, the point of reference is yesterday's low. Yesterday's low is 1989. Okay, that's your new point of reference for 2016. If you want to trade the spiders today, this is kind of what I'm thinking. The question is, can we hold above yesterday's lows? And, it retraced a little bit. So right now the spiders are around 200. Yesterday we were as low as 198. What is this? This is 198.59. So right, 198.59. So the question is, can we hold a little bit higher versus the low? So once we put maybe a 15-minute low in, maybe you get along a little spiders versus this. Okay, if it breaks this, you get out of the way because that means a lot of people who bought into this bottom candle probably have to hit it out, and then you see a quick move down to where this gap is, and that gap comes into play from September, and that low is 196.33. So write this down and write this down. Okay, if we hold here and push up, maybe there's a chance that you could buy it in the hole and then add for a quick move above 201, and then if it does, you have a big gap here. So we'll see how much the bulls could fill this gap by. If they can't fill this gap at all, okay, and we stay inside yesterday's candle, that's going to show a lot of weakness, and then we should get some follow through to the downside. Today, if some of the FANG stocks go green and oil doesn't fall apart, et cetera, maybe you could buy down in the hole for it to go green, push up, and then I think a likely spot for some resistance would be about halfway into the gap at around 202.40. So if I were to play this, maybe buy it in the hole versus spot, trades into the gap, let it fill some of the gap. It was trading at 201.60.70 yesterday after hours, and then that would be your quick active trade. And then we'll see if it could fill any more or not. Again, this is support 1, support 2. If we go green and push into there, that would be my strategy for the spiders if you're trading them today. Every sector looks kind of like this, where you had a move off the lows. So the question is, can we hold yesterday's lows and push into the big gap from yesterday? You could look at just say the IBBs. Not as similar, wasn't as extreme, but if you look close up, you'll see a huge open gap here, right? This is a big open gap. And right now the technical problem is it's below all these moving averages. They're curling down, so that's bearish. Okay, so today you'll see what happens with the bios. Can it hold the low here of that is 324.52? If it doesn't, this big gap is going to be blaring, and if it does, maybe it tries to work its way back towards yesterday's high and push into this gap a little bit. Okay, if you want to look at the Qs or XLK, which a lot of guys use also. This is technology, which has been the strongest group. So if you look at the XLK or the Qs, it's very similar. They're going to be opening lower today. So you buy it or look at it versus this spot, which is 41.61. Perhaps it's right now around 41, and if it happens to trade through this high here, okay, of 42.28, you might get a cash flow trade to fill some of this gap. What might happen is it might push in, you get a quick squeeze, and then tails lower, okay, and then all of a sudden, you could have been a buyer, seller, closes weak, maybe even get short then if you think that we're going to continue to the downside if we needed another day. So, that's pretty much the sequence. And again, if you trade it into the gap, you only hold it if it stays above it. If it trades above it, gives you a quick 30 cents back below it, that'll be a red dog reversal the other way. And we know we can play it both ways. Now, some things to look at today, obviously you look at oil. Oil itself, tried to rally yesterday, still no traction. It's off a little bit today. Support one would be right here going across. If the USO breaks below 1082-ish, chances are you're going to hear the rumblings for a retest of at least the lows here, which if you look closer at the USO, you'll see that is all the way down here. So this is support one, and this would be, I guess, the real threshold support at 1050. Wide and loose, not very easy. The XLE early on tried to show some strength. It's still hanging around. This has been a friggin' broken sector. I've gone over this so many different times to show you how you could save yourself money. Here's when the 8 and 21-day broke. This is when the 200-day broke. It's been an avoid as a swing trade, let alone an investment, probably since about 91. And now it's all the way down here trying to grope for some kind of bottom. Now, if you're thinking that this could be somewhat of a January effect type trade, which it might, okay, it's still holding the lows here. You take a closer look here. It'll need to hold this spot, okay, or these two spots. So if you want to write down support, the XLE support is 59.30. And then if the oil gets a bounce and this happens to get some real volume and wants to clear this lower pivot, resistance one would be right here, which is about 60.89. And then it's been below the 21-day since almost 68. That'll be the next obstacle for the bulls to reclaim, kind of like what it did here. Remember when it reclaimed the 21-day, you had a nice move up to higher moving averages? Well, you're going to need that to happen in order to get some kind of oversold bounce towards here. So as of now, the jury's out, but it did show a little relative strength yesterday. Yesterday in the morning call, I talked about if high beta tech breaks below the 50-day, will there be continued selling that started the Wednesday, Thursday into the last week of the year. Google sliced the 50-day and came off of it, so we'll see what happens here. It's been in a very strong trend, and the 50-day moving average that's been support since October, it went a little bit below, came back above. Your first clue that you couldn't be in this for a swing trade was when it actually, or an active swing trade, is when it broke above the prior high and couldn't hold it. That was your out, and if your out was there or you got short there, you made some good money yesterday. And if you were flat, maybe you bought versus support. And now, just like the sector that I showed you, just like the spiders or whatever, same kind of strategy today. Okay, can you buy it in the hole versus this low? And if so, and it goes green and they want to give a little bit of a push, okay, then it would have to get above yesterday's high. Yesterday's high is 762, and then I wouldn't expect a hell of a lot. All these moving averages are curling down, and the moving average, and this gets kind of filled up to 769. So that would be the strategy for today. Can high beta tech go green and push a little bit into the gap and help lead the market off the lows? If they can't, and it stays within this bar, okay, or just pushes a little bit, comes back below and stays there, chances are it could be vulnerable to break this at some point, developing a bear flag for a move, maybe even down to this gap. So at this point, that's that's basically the mantra of the day. Can we hold yesterday's low and push into yesterday's gap, and and what could do it first and lead other things or not? Amazon was weaker compared to Google yesterday. Couldn't get back above the 50-day. And same type of pattern, though. Remember that 2-day move that people made decent money on? Well, when it broke out and failed, that was a bearish signal. That was your signal to get out or get short. And if you did, you didn't have to handle this pain. And now, at this point, you just have another channel. Look how long this channeled here, with a lot of different type of action, sometimes below, sometimes above. the break below to come back in, failed here, held here, and then went. So now it's working on another channel up here. But anytime it's below the 8 and the 21 day, you tend to want to be out of it in tactical. You want to be in it when it's above it. Okay, right now it's below it, so I'd be very careful there. And then you move on to Facebook. Facebook actually was weaker into the end of the year. If you look closely here at Facebook, you'll see, we did have a decent trade there. For those who are, around with me, and weren't away on vacation. You had this one little move here, which can make you money tactically, gave you a move back to resistance. And then I remember, then I had some, and then once it crossed back below this, I got out. And then it closed below the 50-day, giving you some signals to get out of the way, and then boom, big move lower. I talked about the 150 to 101.50 area to see if it could hold the one a little below. And now the same kind of thing, it's down 50 cents. Can we buy a little Facebook down 50 cents or so, and then be able to add to it for a little bit of a push above this 102.24 to fill a portion of this gap? That is my strategy for today. If it can't get in that gap and it stays below, maybe it takes a few days to do it and then get in there. Who knows? I will be avoiding it. Yesterday, Apple, which has been the weakest one out there, went green first. So, it could be, a little flight to quality. It could have been just their buyback machine was on and, new money coming in from mutual funds overpowered the selling. So today with it down 50 cents, same kind of strategy. I remember being long a lot of this on this day. Remember that day after the jobs report? It looked like it engulfed this entire range, and then I got stopped out when it broke this spot here. And then from here, it's just been a sell. So with that being said, I guess here's your new pivot support. It's below every moving average, technically broken, but if it wants to hold this for another session or so, it seems to like to kiss this 8-day moving average, which is now resistance. If that's the case, maybe, if the market wants to try and use Apple as a vehicle for the S&P not to fall apart, you could say, you can get a move up to 107, but it's not going to be great. Remember this move from 105 to 109? That was the kind of little trade I was looking for here. Went green, maybe it goes green again. If it were to trade above yesterday's high, maybe you get a push there, but that's not a lot of meat on the bone there, I don't think. But that's what that's what it is. It is what it is, right? You got to trade what's in front of you. Some of the solar names have been acting better. Goldman Sachs upgraded FSLR. So if you want to put FSLR on the screen to see if it could provide some leadership to some more solar, this name has been acting very well. If you look at it, actually, from bird's eye view, up in the sun. I'm kidding. 75 is big resistance. It's trading above this for now. Again, I know these stocks are overvalued and they're kind of concept plays, et cetera, but when they're above the 8 and 21 day, they're kind of strong. And this one went green yesterday, so maybe somebody knew. It actually held this gap still. Okay, so above, if it holds 68, maybe there's some follow through. Solar City, I'm not so sure what's next here, but this too, gave you a big move, reclaimed the 8-day moving average here, got extended, pulled back, and is still above the 8 and 21 day, went green yesterday. So maybe this is something that if it wants to push for a day trade and show some relative strength, you can get a move here above this little spot. I'm just not getting my little pencil here. Okay, so you could maybe trade versus this spot, and if it happens to get above yesterday's high here, if you want to write down, what is this, 59, 52, or 53-ish, there's the highs there, and there's a big short interest here, so we'll see. Everything else, the trade changed a lot last week. Baba that looked like it was going to break out wound up breaking down. If you just love this story, I liked the pattern here when the pattern looked like this. Okay, it looked as if it was going to break above and get going. It'd be a great trade. That's why I bought the June 15 or 22nd options. Well, it didn't. That's what happened. That's why I took the options, because it didn't confirm the breakout. But at this point, kind of still hanging around, came off support. Same kind of strategy, I guess. If you're long adverse that low, maybe it pushes into this gap here. But now it doesn't look as good as it looked into this spot. And I know, we love momentum, but that's how we made a living. Usually, if you're in a healthy market 1, 2, 3 on the 4th time, it's breaking out, not failing again. But that's the market we've been in for the last year, where breakouts are far and few between. So see if that holds there. Same thing for Tesla. Tesla had the car numbers come out. It was a good trade for us last week, but then, it was just a trade, right? I said, what did it go? Can go to 242. All right, right here it looked great, right? Remember that trade here? It triggered above this little spot. It was like get long, and then, you know, it opened down the next day. I said perhaps it can get up and tag the moving average for a trade, and then it went there the next day and went even a little bit further the day after. But then you had to take it if you wanted the risk of the car number, which none of us usually do. That's taking stock into earnings, and then pow. So now it's right back into this monotonous, you know, range that, you know, could knock your, you know, frustrate the, you know, what out of you. And that's really it. You know, the metals had to build, you know, a bid yesterday because I guess all the crazy volatility from around the world. So if you look at the GLDs real quick, just to go over, you know, it's been a very, very hard trade. I guess I remember I tried to be long it right here into this. You know, this was the epitome of last year. Every time something looked good, right? It came from here to here, held for 3 days, looked like it was going to break out and go, and then pow, it failed. And now it's right back there. So with that being said, if you're still in the GLDs, you know, maybe be inverse yesterday's low of 102.49, and then, you know, there's still this little resistance area for it to go a bit higher if it wants to, if the volatility stays there. But again, it's hard to trust, and maybe a new year it acts better. I don't know. To me, I haven't had much success there. You know, bring back, you know, 2008 when it was at 850 and it looked great, and you had that wedge pattern, and then you had the inverse cup and handle pattern, and then it trended for, you know, its whole way to 1900. That was fun. Since then, it's been an avoid or a short. So in closing, it's the second day of the year. Futures are down a bit, not as bad as yesterday. Question is, do we hold above yesterday's lows? If we don't, volatility could spike again, and then you figure out what's next. If we do hold and you see some things go green, see what could push into yesterday's gap and how much of it fills. It could fill a partial or it could fill a lot. You know, we'll see what happens there, but take those trades into the gap. And if we can't get into yesterday's gap at all, okay, and it's just an inside day or so, you know, then we'll see what happens next if we trigger to the downside or to the upside. But at this point, tactical, quick feet. The year just started. Don't get yourself in a hole early. Yesterday was a little bit nuts. I don't think anyone was expecting that kind of open, but I think most people came in with risk down. I had a little error, unfortunately. You know, I had a position open that got filled into the end of the day on Thursday, so I had to trade around it, and it kind of set me back, but it is what it is. That happens. My fault. I guess I should have figured that. But anyway, whatever. We'll get past that. And if you got the 2016 report, hopefully you enjoyed it. You learned something. I talked about a lot of my rules, my lessons, talked about last year, talked about some, you know, levels and question marks for this year. And if you get Redler All Access, you'll see me, you know, execute on them. You'll see all my disclosures at the bottom always has my longs or shorts. And typically each day I have about 25 different names in there with different levels and thoughts on how to approach it that day, and then sometimes longer term based on inflection points. So, you know, I'm here to help you navigate. Hopefully you use it to your advantage. And you could also be on the virtual trading floor where we see things pop up live. We have 300 plus people talking all day long about what they're seeing, how they're reacting. So there are resources for you out there. Just look into them and get them at your disposal. Have a great day. I'll see you at the recap.